Okay, we'll just oh, we're on. Okay. Hi, Andrew. Welcome to Venture with Grace.
Grace, how are you?
I am apparently not dying, so like that's great. So yesterday, yeah, I hosted a dinner and then I thought I lost my wallet and then but it was like a heart attack because yeah, I found it like after 15 minutes, but it was a lot.
There you go.
Um so sorry. Oh my God, I'm dying.
Well, at
Okay.
least it's a beautiful day out in San Francisco, so just you'll get out of it and enjoy the beautiful day out here.
Thank you. Super appreciate you. To start the show, I want to give a quick shout out to our amazing sponsor. This episode is brought to you by Nebius, the ultimate cloud for AI innovators. Nebius provides AI infrastructure you can count on, combining reliability and speed with flexibility and engineering support unmatched by hyperscalers. AI leaders like Meta, Shopify, and Higgsfield already partner with Nebius to run their AI workloads. Plus, venture-backed startups can save up to 150K on compute costs when they apply for access. Visit Nebius.com or Nebius.com/startup to learn more. Also use code GRACE. You may get a surprise discount. To start the show, I want to say, Andrew, it's so great seeing you. And to start the show, I want to start with like your background. So before you joined Urban Innovation Fund, you were working at different VC firms or like real estate investment firms, and then at some point at a YC startup. Maybe we could talk about like what were some core lessons that you've learned early on in your career, kind of shape you into who you are today.
Yeah, no, it's a fun question, and I think now being kind of with Urban in the Urban umbrella, and I'll get more into that over the last 8 years or so. I think what I've learned in venture really is that there is no kind of consistent path to getting into venture. Whether you're a founder, whether you're an operator, whether you're this, whether you're that, like there is not a consistent like private equity, 2 years of banking, 2 years of associate, boom, like nothing at all like that. And my path is very similar, which is it's wild and all over the place. So I started out my career in finance. I was on Wall Street. I was at Barclays on their sales and trading desk. That actually kind of opened up my eyes to fintech for the first time. And this was right when kind of fintech was becoming this like new sexy thing that no one had ever heard of before. But so besides kind of trading treasuries and interest rate swaps. And again, my like core job, I was also on a team of 5 that was specifically, representing the entire 150,000 person investment bank on building out our electronic trading infrastructure for the fixed income commodity, or excuse me, the fixed income asset class. And this was kind of a response to the global financial crisis from 2008 and 2009. There were a lot of rules and regulations and kind of like, how can we take all of these bilateral products that kind of blew up the entire banking system and bring more visibility into to them with the whole hopes of just providing more checks and balances, making sure that people aren't over levered and trying to prevent what happened in 2008 and 2009. So it was a really interesting kind of first foray into this notion of like, hey, I can bring innovation into these legacy old industries that are 150,000 people and like this or that. Like I didn't think of myself as like going to work at a fintech, but I saw firsthand the impact that could have in a legacy organization like a global investment bank. And so that kind of got my brain spinning a little bit. It was still a long way away from venture, but after 4 years there, I really loved that. I realized the markets were fun. I was, young in my 20s. It was fast. It was loud. It was, everything I thought I wanted. But I realized I really wanted something more tangible and something that I could really kind of dig into. And so I made a transition over to real estate private equity, where I was on the acquisitions team, still in New York. And again, just as when I was at Barclays, this was kind of when fintech was becoming a thing. Coincidentally, after the 4 years there and the 2 years when I was in real estate private equity, this was also right when proptech was kind of becoming a thing. And so, of course, I was, again, in this old legacy industry. And this is right when companies like Airbnb were really starting to blow up. And so that got the wheels turning. And that's when I said, all right, I want to go back. I want to leave this. I'm very intrigued by this notion of like bringing innovation into these old legacy industries that kind of underpin society. Went back, got my MBA. So I spent 2 years at Wharton and UPenn. And honestly, my whole goal was basically how can I learn more about the early stage ecosystem and innovation ecosystem. It's something I know basically nothing about. Went to school on the East Coast, went to school for finance, like very traditional, very not tech, not innovation forward. And so I spent 6 months out in San Francisco during my MBA, basically buying coffee for any founder and any VC who would talk to me. And that's just where I kind of learned the lingo, learned what people were looking at, learned what was happening. And it was there actually an investor had mentioned like, oh, like you love proptech and you love fintech and you like, bringing these kind of innovations into these large legacy systems. You should meet Julie and Clara, who were the GPs who started the Urban Innovation Fund. They just raised Fund 1 at the time. They were looking to bring on an associate. Went online, saw that they had just posted a job application, sat there and said like, oh, boom, like this is exactly in line. Wound up having conversations, and that was it. That was 2018, and so I've been with the Urban Innovation Fund since. With the one caveat that I spent 2.5 years. After I'd been there for 3 years or so, I spent from 2020 to like 2022-ish. Leading the finance and biz ops team at Grain, which was one of our portfolio companies. It was a fintech company, so it was like a great natural fit. I wanted to kind of get some like operating experience. It was incredible to see the boom and just learn a lot more about what it's like operating at a like hyperscale, early stage, fast moving, building a team, all the things you don't really think about. And then I wound up kind of coming back on the dark side, if you will, when we launched Fund 3 a few years ago. And so I've been back on the investing side with the Urban Innovation Fund since, and we just launched Fund 4. So it's been kind of a wild ride going from 150,000 person global investment bank to a real estate private equity in New York to joining a venture fund 1, which is effectively like joining a startup. Since scaling AUM kind of 10x from there, and now having a portfolio of 75 plus companies. Everything from 2 people and an ID on a napkin to a company that just raised a Series D and unicorns, et cetera. So it's been a fun and wild ride.
For sure. I want to start with like, first of all, like that's such a cool journey. And then also that like, I feel like you are not based in Silicon Valley. That's like make it even more unique. I know that like you're here all the time, but like on the other hand, it's like, I feel like it's a very unique journey. And then when I'm thinking about like, the last part you mentioned, it's like you guys invest in C to Series D. So I want to start with like, urban innovation funds, like fund thesis. So you guys invest in like regulated industries and, particularly, I guess, like regulated industries. And since you mentioned C to Series D, can you talk about like the portfolio construction and maybe like the check size as well for the audience? Maybe there are founders that are trying to raise anything from you guys.
Yep. Yeah. So I mean, with urban, like our thesis very much broadly revolves around this idea of like the future of cities really means like backing technologies that underpin kind of like our built environment, our social systems, and help drive economic vitality. So we take a super expansive view to kind of what makes robust urban communities. And so how that kind of translates into investing is, we like to back startups that transform these like massive regulated industries. Our entry point, we love to lead at kind of the pre-seed or seed level. Typical check really anywhere from like 500,000 to like 3.5 or 4 million. So generally quite flexible based on round dynamics and needs. Besides capital, we're super hands-on and active investors, whether that's helping with customer intros, whether it's helping with hiring, certainly regulatory support, et cetera. We really just want to kind of roll up the sleeves and be there from day one. It's a lean team. It's 4 of us total. We're based out of San Francisco, but invest across the country here. And to your point, while I spend a ton of time in SF, like I am right now, I am based full-time in the Twin Cities in Minneapolis, and have been since 2018, which I will pause and get back to because I really find it as a kind of a superpower. but that's our fund thesis. We typically write kind of like 10 new investments per year. But going back to we want to be an active member on the cap table, not just at the pre-seed and seed, but as a company scales and grows through Series C, D, IPO, et cetera. We've been on the boards of companies negotiating acquisition offers from Fortune 500s. We've been there kind of facilitating those Series C and Series D. So, even though, yes, we're hands-on and active from the beginning, we certainly save with follow-on and with other investments. We want to be there for the life of the company. Going back to, I guess, more about me and some of that interesting. So as I mentioned, I'm in Minneapolis, and honestly, it's been a huge blessing because one, I've become much more of a digital health and healthcare investor because there's such a strong ecosystem there. And that's directly translated. I've got great connections with the Mayo Clinic, for example, and I've been able to get them as investors on some of our companies that are based here, and been able to kind of facilitate a lot of that. As just that is one of their major ecosystems. And so whatever I can do again to help with our portfolio companies and my portfolio companies, it's been valuable. But I think beyond that, originally I went there, and this was pre-Zoom, it was pre-COVID. So it was pre this notion of a lot of, investing and having Zoom calls and this or that. And I spent a lot of time just on the ground and in areas like Austin, like Denver, like New York, that kind of had these emerging startup hubs, but were certainly not mature startup ecosystems like the Bay Area. And that translated directly into some, really exciting investments, really exciting partners. And I think, again, as we think about building these robust urban economies and this robust future of cities, we don't want to back startups shaping the future of San Francisco. We want to back startups that can truly fundamentally transform, all cities and the billions of urban dwellers across the globe. So while I love coming back and forth to San Francisco, and the majority of our fund still has some connection to the Bay Area, it's been incredibly helpful to be able to focus a lot of time and efforts on a lot of the markets outside of the Bay as well.
I have so many questions there. By the way, I want to give a quick shout out to some of the audience who comment. Hi, Snehanshu. No, you did not miss it in yourself. Just keep tuning. And then Woman's of famous Gen Z LinkedIn creator. Yo, okay, just want to say hi. Okay, so most people lurk. So whenever people comment, I want to encourage people who comment. So I want to start with I guess one thing that I find really interesting is you mentioned about you guys are investing in a lot of these different emerging cities in terms of urban innovation. I guess first of all, how does the sector that I guess maybe we'll start with what are some subsector that you personally find interesting, the investment thesis, and then we can dive into how does the money flow in the ecosystem. As I know that you guys invest in Allocate, and that's something very interesting, but I think that's not what you think about the infrastructure for urban development. So how do you kind of categorize the thesis, and then we can diving into the
Yep. Yeah, no, it's a great question. And so, we have a very broad thesis, and I'll go back to that notion of in our mind, this notion of what really kind of is underpins a robust urban community. We think about it in kind of three buckets, which is our built world, our built environment. So think that's where a lot of my love and interest for areas like proptech, livability, et cetera, exist. We think about strengthening our broader social systems, and that's where a lot of the digital health, that, for example, digital health, ed tech, et cetera. And then the final bucket is our what drives economic vitality. And that, for example, is where a lot of the fintech. So again, one of the reasons, going back to my origin, is I love fintech and proptech because I was kind of right in them as they were kind of becoming these emerging industries. But Allocate, for example, is very much in that economic vitality bucket, which is, as we think about what is the lifeblood of, urban economies, it's a robust, small business, private markets ecosystem. It's the same with Jeeves, for example. So Jeeves is a global bill.com. They originally started out as kind of a global Brex. We led their pre-seed and seed round and have participated in every round through their Series C. And so like that, for example, it's like, yes, is it an IoT project that is like very, tangible to like, oh, I can see and feel that? No, but at the same time, like if we can increase the like capital availability for medium enterprises or make it easier for businesses to operate internationally, efficiently, cheaply, and like be able to like optimize that with their kind of like global infrastructure, like that absolutely has impacts on building these robust, economically viable and economically, kind of vibrant communities. And so that's where the kind of breadth of our thesis lies. Now, on the flip side, there are definitely things that don't fit perfectly within our ecosystem, which are, typical kind of like CPG goods, like typical dev tools. We're not going to be as excited about the next Notion, for example. But on the flip side, we led or co-led the seed round in a company called Scent based in New York. And you might look at it and say, hey, that's a dev tool. How does that fit in urban? They're basically building the AI native Twilio. And so what they're basically building is this kind of like infrastructure layer that makes it super easy for businesses and consumers to interact with one another. And don't think of messaging as, your, marketing spammy messages like, hey, we haven't seen you 10% off this. But they're building that like kind of like single pane compliance layer that sits on top of all these different carrier networks, allows greater deliverability for everything from like a security code trying to access your bank account to a reminder about your open table reservation, like those type of like product embedded messages. And so as we think about like, how does this impact urban? We think like, hey, if this is the channel in which businesses and consumers will continue to communicate and transact, and it's going to become more and more prevalent, especially in this kind of agentic economy, that underpinning is very core to our thesis. Even if you look at it and say, hey, that's a dev tool, I think very differently on that. So hopefully that helps explain kind of the breadth of what we think makes these like robust urban communities.
I love that. I was wondering, so like, I may have a deal for you. So yesterday at our dinner, so there was a person that's like when I was like looking at Jeeves, it's like it's kind of slightly similar. So they're like a stable coin company that's like transporting money from here to Mexico. I think that's like
Yep.
now it's like a globally, but yeah,
Yep.
I feel like there's so speaking of that, I wonder like maybe we could use like any of your portfolio companies as an example of like how you guys like specifically source to like um evaluate diligence to like winning the deal to thinking about potential exiting. If you could use any of the example, and then maybe we could dive into specific subsectors as well.
Yeah, absolutely. I mean, you mentioned Jeeves, so like I'm certainly happy to use Jeeves because they're an interesting case. So going back to kind of what I view as kind of a superpower again is being in the Twin Cities, which you would look at it and say like, well, how is being in Minneapolis that valuable as an early stage VC? So this was 2020. This was right before COVID, and I was down in Austin, just visiting investors, visiting other ecosystem partners, and Austin has kind of this great, and that has now turned into a really strong startup scene. And one of the investors down there is Silverton Partners, and they at the time did more like Series A type deals, more traditional Series A type deals at the time. And I was meeting with one of their associates or principals who I'd gotten to know. We were getting coffee, just kind of chatting deals. And she said, oh, have you met? We were talking about fintech, how I love fintech. I love like fintech infrastructure in particular. And she said, oh, have you met, Dilip and Sherwin from Jeeves? I said, nope, never heard of them. At the time, it was the two of them in New York. Dilip, the CEO, he had just left. He had just quit, just kind of gone full time. They basically had nothing more than an idea on a napkin. But I got connected to this team based in Manhattan at the time through this investor in Austin. It was really early. I was very intrigued. I really liked him, but it was too early for us. It was very theoretical. It made a ton of sense, but they didn't even have a product. They had really nothing to grasp off of. And I kept in touch with them. That was in February when I connected with them, February of 2020. I connected, kind of kept in touch over the coming months. They wound up going into Y Combinator in the fall batch at the time. So it was fall of 2020. And as they were in that process, and only because I had already built that relationship with them, I became like very close, caught up with them, saw some of their traction. They went from like, hey, like 0 to our first 3 customers. And it's like, hey, that's a milestone. They went from like 3 to like 1,000 customers who were now using it. So it's like, whoa, like there's something here. Like even before like the revenue generation, like clearly it's resonating. And because we had already kind of built this relationship with them over time that started from this like coffee chat in Austin, we were able to move quickly, and we're able to wind up leading that seed round. And from there, so it was like, one, this is great because we probably would not have been able to move fast enough to get comfortable enough with diligence, to get comfortable enough with their big vision and where they wanted to go, given the momentum and traction that they had, combined with it being in Y Combinator. And so looking back, it's like, I don't think if I'm not spending all my time in these different ecosystems, talking to different investors and players and getting the connections and like telling our pitch and what we are looking for, and then building that relationship and building that trust with the leap to allow, at the time I was an associate, to allow some associate to actually kind of lead something like this, like that deal never gets done. We wound up going super pro rata in the Series A that was Andreessen led. We wound up going super pro rata at the Series B, which was CRV led. Subsequently through their Series C at a $2.1 billion valuation. And so we've been kind of instrumental from the beginning. And like, as I think about it, it's funny because it's like, yeah, at the beginning we were much more involved with like customer intros, like how you think about positioning, how you think about crafting your narrative for your next round of funding, that type of things. But even now it's a $2.1 billion company. And for example, like I know Dilip and the team we office out of Shack 15 in the Ferry building. And the last, like every quarter over the last 2 years, Dilip still like uses us because we've got a great like conference room that's for like 12 people. They're not like, he's based in Miami. They've got a bunch of engineers kind of all over, but they basically come as like a leadership offsite here. And it's great because it's like, we love hosting them here. They love coming here. It's great in the center of like San Francisco. So like, are we as involved today in like the day-to-day? No, they're a Series C company. We're not equipped, nor is it like the right for us to be focused on that. Like the CRVs, the 10 cents who like did their growth rounds are going to be. But we love hosting them here. We love bringing them in front of our LPs at our annual meetings who have subsequently participated in rounds as institutions. So it's like we find other creative ways to still be involved, even though it's a long way away from when they were a pre-seed company, two guys with an idea on a napkin. So that's why it's like it's so honest and true, and it's like we want to be there for the life of the company.
For sure. I wonder, I want to tap into like one thing that you said was like you would I guess like you would like circle around the idea with like people who are not based in San Francisco. I think that's like a unique advantage. And I'm curious, like what are something that you're seeing that like people are not in SF that are looking at right now compared to SF, since you're kind of like traveling a lot here. And you also mentioned about like the agentic economy, like so for you, like what does that entail? Like right now, I feel like every company is an AI agent company to a degree. So
Yep.
And then what are some stuff like, okay, I don't want to like,
yeah. No, there's a lot to unpack there. First, like an AI, it's interesting. So one, I think historically we have never been a huge like boom or bust type of fund. And what I mean is there have been different fads. Like we didn't invest much in like anything crypto or anything like huge blockchain back in like 2020, 2021, when a bunch of people were Web3, et cetera. We didn't invest a ton in like AI co-pilots or AI application layer in the last 2 years. Like our pacing is generally like we've had like 8 to 12 investments like every year, and it's like very consistent up year, down year. And that's like, we definitely like, it's hard to do. It's hard in like a very exciting environment not to like really try to like push those checks out, but we really try to push ourselves on that. As that pertains to like AI, we have historically been much more excited by like underlying like, hey, how can this like software or AI, turn into infrastructure? So for example, going back to Scent, which is that AI native Twilio, that's not necessarily a copilot or this or that, but it's like this notion of like, hey, we think AI can fundamentally create this new infrastructure, create this kind of like, what Stripe did for payments, Scent can do for messaging. And that's like a single compliance layer. It can be this orchestration layer that sits on top of all these different carriers and all these different networks and all these different channels, whether it's SMS, iMessage, et cetera. Like that is, you would look at that and say, is that an AI company? No. Is it like a classic like AI agent, like this or that? Like no, but it's very AI adjacent, and it kind of unlocks a lot of like AI on top of that. Those are the type of like AI companies that I really gravitate to. It's also similar to Ferrum. So that was another deal of mine that actually came from the Twin Cities because again, there's a really robust kind of medical community, both like med devices, digital health, because of Mayo Clinic, because of United Health, Medtronic, et cetera. There's just it's a very dense ecosystem. And Ferrum at the time when we invested, they were building kind of the Plaid for healthcare AI. So they connect AI approved vendors. So all of these like AI agents that are helping radiologists identify fractures or mammograms or whatever, they're the infrastructure that connects all these vendors to clinicians and hospital systems to help bypass procurement, to help make it streamlined. And they've kind of expanded upon that. And now there's kind of this like governance and observability tool that sits on top of like the entire clinical AI ecosystem. But so like that similar, it's like, is it an AI agent? No, but it really fundamentally, it allows for this agentic economy to blossom. So those really are the AI companies that have gravitated and like have been the most exciting to dig into and pull into, much more so than kind of the individual, whether it's wrappers, like vertical AI agents, anything like that. So that's kind of where I've been pulled to. And going back to the first part of your question about like, what have I been seeing? It's actually interesting because, I think part of that thesis and narrative has probably come not from any individual area, but from bouncing back and forth and being in New York and seeing a lot of these like enterprises and like what is actually being adopted and what do people need. Another company that, kind of looking at right now that fits in that is a company like Visco. They're super early, 2 Stanford PhDs that just started coding like 4 months ago. And what they're building is this like operational compliance layer that sits between regulated industries and third-party AI endpoints. And so like, what does that actually mean? So in practice, their first use case is with an immigration attorney. And one of the whole kind of gray areas of using AI tools, whether it's a Harvey, whether it's ChatGPT or a Claude, is not, those are like the security aspect of those is getting better and better. That is not the huge issue. The issue is, do you breach attorney-client privilege as you start to use these tools? And that's an interesting gray area. And so what they basically do is provide this, like, whether it's in-house, like on-prem solution to basically kind of gate everything and act as that gateway for private data. So you can get rid of shadow AI use if you're illegal. You can get rid of it if you're in financial services. So they want to be that kind of compliance layer that actually fundamentally allows a regulated industry with sensitive data to start using these endpoints and be kind of endpoint agnostic. And just in having a deep network in the financial services space in New York with various hedge funds, whether it's like a Jane Street or a Citadel, a Marathon Asset Management, getting connected to some of the like CTOs there and like understanding how they're thinking about that. That helped shape like, hey, they're not looking for this agentic tool that is like going to be perfect. Like they're like, that is the pain point. And so it's been interesting to like cobble that up and, in the core of the like financial ecosystem of the world and be able to say like, oh, like if that's really the like major pain point and that is the like board level, how can I translate and like find that? And so it's like kind of that, like, I like that because it's marrying a lot of these things and then going back and saying like, okay, well, who is building that? And like, what is actually where is the urgency? Like, where are you actually going to be able to break in? It might be harder trying to sell those in, but it's like, that's that infrastructure. So I'm constantly trying to do things like that to kind of marry this, like, what's the innovation happening in the Bay and elsewhere? but what are the practical needs? What are the practical hair on fire problems that we're seeing in a lot of these other markets?
For sure. Hi, Jimmy. We're gonna address your question in a little bit. So I'm curious, and I really like what you said about you are finding a problem or like finding a solution in the Silicon Valley and then see what can be applied outside of Silicon Valley. I think like another question I had was like, since I was listening to my notebook LM podcast about like the Urban Innovation Fund, and I was curious about like when you guys were entering these like kind of like companies that are trying to sell to the government, let's say the mayor, or like they're trying to sell to like an area that's like they're not really close to. Like I'm sure you guys have a lot of like playbook or like tips for them to like actually establish the sales system, especially if they're like, 20 years old people trying to sell to the compliance ecosystem. And like, can we talk about how that's like economic works in selling to the government? And then we had a few investors that are kind of like specialized in that category. We had the general counsel of Uber. I think he is like famous for like doing these kind of things that are like pushing the boundaries. And then we had Ross Fubini from XYZ. So he was, I think like they were tied to the Palantir and the real
Yep.
ish companies, and like they have playbooks. And then basically I think I remember chatting with him, my takeaway was like it's really really hard to sell to them, and then you have to have a very specific playbook and specific connections because of like the trust is now very easily to build, but the check sets are like a lot huger because of like it's government is very sticky, and they have a lot of money. So how do you guys think about like how does the money flow in selling to these like selling in these like regulated industry, and what are something that you would not touch? Because I think why I'm asking is like I've been keep thinking about like companies like Kelshi, like is that even legal, or like but nowadays like everyone's doing betting on everything, like so what's your perspective on like what is something that's easy to be like generating a lot of revenue versus what are something that's like not?
Yeah, it's a good question. It's what a lot of it, especially because our whole thesis is playing in these regulated spaces, and so we do a lot of govtech and civtech who sell directly into municipalities, whether they're local, state, federal. But I honestly see a lot of parallels too to not just selling in municipalities, but also it's the same selling into ed tech, selling into hospital systems. Like it's kind of a consistent, like this is a really hard playbook. It's a slow sales process. It's hard to break out at scale. So like, what do you do? And, this is something that I think is very disappointing that a lot of founders hear when we, when we're investing in them and like chatting with them, which is like, there is no perfect playbook. There's no perfect blueprint. There's no like kind of like magic bullet that like, oh, like we know how to bypass this, or like, hey, you're going down an FDA process for this, med device or new process. Like we can't, nor can anyone bypass that. But what we can do is help to make sure you're in the best possible situation to streamline it as quickly as possible, and also manage like, okay, what other milestones can you hit to show that traction while you're waiting on this regulatory risk? And so I think it comes down to like, first and foremost is you have to be super, super cognizant about, what is the hair on fire problem? What is the true urgency that your potential customer, again, whether it's a municipality, whether it's a hospital system, whether it's an education, like a school district, et cetera, like any of these like regulated, slow moving bodies, like what is the core pain point? And I think it sounds simple to say, but a lot of people just don't really hit that. A lot of people say like, hey, I'm having a hard time with these like enterprise sales in a municipality or into a school district. But the reality is you're trying to sell a nice to have and not a true need to have. So I think at the first is like, you have to be laser focused that like, this is a hair on fire problem. Like what is at the town planning meeting, what is like the number one from, mayor down, like what is there, like this is our priority number one, like what is keeping them up at night? Because if you don't, and you're selling that nice to have, like you'll get through this process and you realize you're just not going to have a champion who is literally going to try to pull you through. Can you get through? Sure, but expect it to be slow and painful. So like number one, find with the hair on fire problem, find the urgency. Number two, I think is how can you de-risk it in a way that you can break in without waiting for whatever that full process is. So like a simple example, is there a procurement threshold if you're selling into a city? So for example, like one of our portfolio companies is a company called Infilla, and they're basically building like an AI native, like Tyler Technologies. And they're trying to build this like kind of like permitting and building infrastructure to allow for faster permitting, faster building. They actually just won a contract with the state of Delaware, which is a huge unlock for them. They're a seed company. They just the state of Delaware just announced it a week or two ago. But they're going to be basically the underlying infrastructure for all of their permitting, whether it's, hey, I need a permit for hosting a barbecue for my niece's 10th birthday in the park, to I need a permit for, building a 12-story, 100,000 square foot office in Dover, Delaware. Like they're the actual infrastructure to like streamline and make it easier for all stakeholders involved. And how did they get started? They got started by being under the procurement threshold with like the city of Sonoma, city of San Francisco, where some procurements, it's like a 25K. And if you can get under that, you don't have to go through the same RFQ process or this or that. And so like, okay, how can you de-risk and get like a little wedge and a foot in the door to start proving out some of that value, while you can then work through and try to upsell and go through like the bigger process? Because if you're an investor, you're like, okay, well, there's already urgency. You've already gotten a foot in the door. There's expansion capability. That's a much better story than just going out for a $250,000 contract that might take you 12 months. It might take you 18 months, but there's just a lot of uncertainty. So just trying to be very strategic about how you get in the door, what the expansion capabilities are. And on the flip, the complete opposite end is like, is there anything you can do to show commercial traction outside of that? And a simple example is, any type of, whether it's digital health or anything else, trying to go down an FDA process, like, okay, can you build anything that has pilot revenue that doesn't require that? Can you show something that has direct to consumer, just to validate data and to get other information? Again, even if it's not the ultimate business model and the ultimate unlock, how can you think creatively about still showing traction and execution while you're going down this process? And so again, I don't think there's a magic bullet per se, but it's a lot of finagling and finding a strategy based on whether it's regulatory body, whatever headwinds you're facing. It's all about kind of navigating appropriately.
For sure. I think that's so interesting to hear. Like, so one is like finding the hair on fire problem, and then find that like just like basically something with urgency, and then the other one's like break in without waiting for the full process.
Yep.
Speaking of the full process, like how long does it take for something like a government to just like adopting your technology software?
It kind of depends, and it depends like how urgent is the problem, how much is who is your champion? Is your champion the buyer? Again, like we look at a company like Infilla that is a seed stage company. They've got an incredible product, and they just won a massive contract with the state of Delaware. This is something that historically you would need to be a billion-dollar company that has been around for years to win something like that. But they found the urgency, and they found that hair on fire problem, and they were able to get that done in, I'm gonna be wrong, but it's 3 or 4 months. Now on the flip side, if they took that to another state where it wasn't as urgent to try to win first, that could take 24 months. It could be 36 months. They might say oh, this is cool, maybe, and just be kind of stuck in this never ending procurement purgatory, if you will. So there's no right and there's no wrong, but part of finding that hair on fire problem is also finding the right champion who mirrors that. And so it's don't think, hey, I'm in California, I just need to sell in California because of XYZ, or, I'm in this, like, build a product that solves that hair on fire problem, and then find that buyer wherever it is and whatever market it is. And that's equally challenging.
For sure. I feel like that's really cool. And then like I wonder, maybe we could talk about like the fundraising process as fun as well, since like you've been at the fund since like fund 1 to now, and like maybe we could talk about like, as a partner at a VC firm, you have to fundraise yourself. Like, what would you say is like 3 things that like kind of like, or maybe let's start with the one thing. Like, what would be the one thing that really surprised you, since I feel like fundraising for a firm is like quite different than fundraising for like a startup, because startup you have a momentum that you can show to the VC or show to the VCs, but for a fund it's like, you can deploy capital, but that's like a different. So like if you didn't have the entire fund raise, it's like very different, because like, your fund deployment strategy is very different. So how do you think about, what is like one thing that you feel like surprising to you in terms of fundraising?
Yeah, I think it's interesting, and it kind of varies. And so it varies whether you're based on like who you're going after. And it's super similar to like founders. Like, every fund that you're pitching your startup is going to have a slightly different process. They're going to have slightly different needs. They're going to gravitate to different things. I'd say it's the same with a venture fund. And I think one thing that's interesting, especially as you start trying to go after institutional investors, is you have to realize that, they are, their commitment in you as a fund it's a sliver of their broader pie, right? So, if they're giving out $100 and you're probably getting, 50 cents of that dollar as an early stage VC fund. And so what they're looking for is consistency. They're looking for like a true financial steward. They're looking for like, hey, you have a specific thesis. You're fitting in this criteria. I know exactly what you're investing in. Your reporting is clear. This is clear. That's what they want. They don't want you to just kind of go willy-nilly and invest all over and say like, well, I know we said we'd invest, $1 to $2 million checks in fintech and proptech, but I found this really great, new LLM that's coming out that's trying to, knock out Claude and knock out OpenAI, and we were able to put $5 million of the fund at a $1 billion valuation, but it was too right. It made too much sense. Like, that's so out of left field. And the issue with them is they're looking at it and they're saying like, hey, we already have exposure to those type of investments in the rest of our fund wheel. Like, we didn't give you this money to do this. We gave you this money to attack this space. And so I think that's also one of the challenges, is so many venture funds are so small and so nimble. And that's one of the advantages, is like, that's why we are able to move quickly. That's why we're able to get access and expand that access in these early stage deals. But on the flip side, like, it's hard to have all of the controls and the reporting that a $10 billion hedge fund has, or a financial institution like a BlackRock has, or anyone, a Vanguard, et cetera, who's like a much larger piece of their pie. Because again, like, they're managing, and if I'm an institution who backs emerging managers or others, again, what they want is that kind of like reporting standard that is playing at the same level of a BlackRock or a Vanguard or a PIMCO or a whomever. They want kind of consistency in terms of number of deployments. Like, again, if you say 8 to 12 deals a year, we want to see 8 to 12 new deals a year, because then you're managing the like vintage risk. If you say you're going to play in this space and you're going to have this level of ownership, they want to see you play in that space and have that level of ownership, because again, it's a small piece of their pie, and that's what they're backing. And so it's again, it sounds simple, but I think like that's one of the true things that's been really eye-opening, is playing at that type of level does translate really well when we're going out and trying to raise, especially in challenging environments like it is right now.
I think like this is so interesting. I completely agree with you. One is like having a reporting standard that's like really on par with like the bigger funds, because in the end of the day, like people always forget that like VC firm is a financial, or like it's a financial instrument. It is a financial, like you people are looking at financial return. It's not like you're backing the coolest projects that's like, will be having the most like buzzwords. And in the end of the day, like LPs and like people want to see return on investment. And the other part is like, I really like what you said about it's like have like being able to do, having the consistency on what you say you're gonna do. I keep hearing this like a lot for
Yep.
like, especially for the first time fund managers, like the LPs want to see that you are executing off your own plan, because of you are a part of like their bigger pie that they are kind of like looking at. And like I'm curious about like for your fund, like do you feel like it's different than like if you are like a Silicon Valley fund that are like the LP base? Is that like for you guys, do you guys have like government or like kind of like LPs that are in the domain that like people are helping with the portcos, and then how helpful it is? Like I'm sure that everyone's like trying to be helpful, but like obviously
Yeah.
some LPs have like more say on distribution. So like we have people that raise like, $4 billion fund, but only 25 LPs. They're like the biggest institution. So they can make intro to, if you want to put something in Kaiser, they have like a, arm on that, like because of their LPs, yada, yada. So when you're thinking about the LPs that are like for urban innovation fund, like it's like a different set of LPs than the traditional,
Yep. Yeah. We have, without going too deep into kind of RLP base, like I'd say we have a very traditional financial LP base, which is a wide range of institutions that kind of reflect our thesis of, how broad and like what types of institutions and social systems and built environment like makes up robust communities. So we do have a very kind of traditional LP base, and that has translated over to our portfolio companies directly. We've had our LPs, who are large institutions, actually lead subsequent direct financing rounds in some of our portfolio companies, some of the growth rounds. We've had our LPs who have acted as customers for some of our portfolio companies. It's not necessarily a requirement at all. I think across the board, the reality is like our LPs really resonate with our thesis. They see it as differentiated versus generalist funds. They see it as very specific and something that they all gravitate towards. And in the right scenarios, we love being able to connect LPs directly to our portfolio companies, whether it makes sense as potential customers, as advisors, as funders, et cetera. So it's a nice to have for us, not a need to have. But the consistency across our LP base is that they all resonate directly with our fund, with being, world positive, but still very financially driven in this kind of thesis and across this breadth of what we think makes really robust urban communities.
For sure. I wonder, so like when you're thinking about like helping portfolio company, or like I would say like winning the deal part, obviously like I think you guys have a really unique advantage of like being in the regulated industry, being the expert on that. Like maybe if you could talk about like, is there any particular like value add or things that you would kind of like help founder with that's like a traditional firm that may not be thinking of?
Yeah, no, we definitely, we actually talked about this even yesterday. We're always thinking about this, which is one, we want to like use our thesis to help inform our internal, like what we want to go after. We always think about like what are the regulatory tailwinds in a different industries, what's like the unlock, what's the insight, and that kind of also compounds in like, well, like why is this a deal that we should win? Like what is our, like why should we win this one? Those are the ones that we really want to. It's not just, hey, we want to win because we think this will be great because XYZ is in it and let's try to squeeze in and box out. No, it's like, okay, how can we kind of live and breathe this thesis. And so we come up, we're not really out there like hunting for specific things. We're very opportunistic within the bounds of the thesis. But then once we see something that we're super excited, we're constantly thinking of like, okay, well, like how can we be valuable here? Can we be valuable here? And then once we think that, then it's like, okay, like what do we need to do to win? Because this is a deal that, one, we can be valuable. We can help them navigate this. A lot of early companies, it's like, hey, I'm building in the ed tech space, in the digital health space, et cetera. And I've got some early commercial success, but we really want to breach out into municipalities. We really want to breach out into this. We're worried about, this type of regulation. We don't know how to navigate it. Like, that is music to our ears, because again, there's not a playbook per se. And that's also one of the reasons why it's like, you kind of need to be that like lean, nimble team, because you need to be there to help facilitate that. As a super simple example, one of our portfolio companies, Solar Cycle, they're a solar panel manufacturer, or recycler rather. So they are the leader in North America. We led their seed round, participated Series A with Fifth Wall, participated through their Series B, and there's huge regulation. There were a bunch of tailwinds with the Inflation Reduction Act that translated directly into some of the like various solar credits, like recycling credits, like a lot that was involved there. And at the time, it was a team of 10 people. They knew that there was a huge amount of value in this new kind of act that was passed, but they just didn't have the resources to be able to like figure out what tangibly that meant. At the time, Janeri, our senior associate at the team, he probably spent 5 or 10 hours a week with them in the summer. This was either 21 or 22. I think it was 22. And wound up like kind of like unpacking this behemoth of the Inflation Reduction Act as it pertained directly to them, working directly with the C-suite there. And he wound up unlocking like 65 million of tax credits that was 95% cash for them. And as a company of 10, they don't have a policy team. They don't have this, but that was like transformative for them. And that's not something that is, again, like a playbook of like, hey, this is what we do, but it's like, we know how to figure out whatever headwinds you're playing and how to like actually kind of like cut through the crap and find what's valuable. Mm-hmm. And it requires a lot of like kind of rolling up the sleeves and just getting it done. It's not something that you can scale. It's not something that, a big multi-stage firm like can just like throw a bunch of associates on and just say like, oh, do this, because like it's new to them. And so like those are the ways that we try to like really prove out our value. And I'd say honestly, besides that, and it sounds dumb, but we put a huge preference on anything and everything in person. I'd say I try to build really strong early conviction. We try to move quickly. One of our strengths is being a nimble team. We don't have to wait every 2 weeks for an IC or this or that. Like, we can move quickly. We can get through diligence. We can get through customer references. We can get through all of that. And really, I think founders really resonate with that. And that's something that it's hard to quantify what building that level of trust is early, but especially as more funds look to AI for automating workflows, whether it's reviewing decks, whether it's scheduling meetings, whether it's literally sending, bots onto board meetings and other things. Like, it's crazy some of the stuff that has been done, but it's like, in my mind, I want to do the opposite. I want to automate things internally so I can spend more time in person and building the relationships. Like, I want to be that like relationship first VC type of mentality, not the opposite, because I think that is as powerful as and as valuable, especially at an early stage when you don't know what your company is going to look like in 3 days, let alone like 4 months. And it's like, we're going to be here to help and we're going to be able to navigate, but you need to build trust early. And I think that's what you need to win.
For sure. I completely agree with like the building trust part. And speaking of AI, because you mentioned about like the AI to stack, and like, I'm curious about like, what is, let's call it like 3 AI trends that you're excited about.
3 AI trends that I'm excited about. Oh man. Again, I would say like, what's exciting to me, and this is so selfish, is like, I love being able to like leverage AI to do a lot of top of funnel sourcing, top of funnel, like a lot of my like workflows that are somewhat administrative. And the whole reason is like, what I want to do is use AI so I can spend more time building relationships and getting conviction around founders and around people. Like, I want to automate away as much of the kind of manual workflow components to kind of like amplify my ability to build relationships and build trust early on. So that's actually potentially a controversial, because again, a lot of people are trying to automate lots of different angles. But I'd say, besides that, I think AI honestly has the ability, as I think about kind of fundamentally changing, going back to our thesis, I think AI has the way to fundamentally displace a lot of these like legacy industries, legacy incumbents. As I think of a lot of kind of whether it's like sticky software and stuff that has historically been so sticky and so hard to remove in these products. Again, using like Scent as the example, the AI native Twilio, like Twilio, it's like, yeah, people have loved it. And it's hard calling that a legacy company because I think they started in like 2008. But it's not a product that customers love. It's a product they endure. And I think historically, the switching cost has been so high for a lot of these like legacy type systems. And AI fundamentally throws that out the door. And so what you can see is like AI has the ability to actually rip and replace these and reduce the switching cost to such a low point that we're going to see a lot of these like massive companies that have really kind of entrenched themselves deep in enterprise infrastructure. They're going to be ripped and replaced by better products that are not something that their customers endure, but products that they actually love and actually amplify their businesses. So like that is very high level, but that's what I'm really looking forward to.
For sure. I want to be mindful of time. Maybe we do one real question and then 1 minute fire round.
Great.
Okay. So one real question is like, how do you think about like defensibility and distribution? Because I feel like in Silicon Valley, obviously people have to flip the switch when like, like a Cluely or something came out like that, like everyone's like focused on distribution nowadays. But like, I think it is very true that like everything AI, that's like you almost have zero defensibility of the technical mode unless you're building something like infra related. But because of nowadays, like everyone's just using a bunch of coding agent to code stuff, and so like your taste and like your recognition on like what to build is like a lot more important, as well as your distribution. And how do you evaluate an AI startup when they look like 5 other AI startups? Like let's call it like the AI CRM ecosystem or like AI accounting software. Like you would see the same thing about like it's essentially everybody. It's like even the legal space, everybody's literally just like ChatGPT but for legal, right? Like so, how do you kind of like see the defensibility kind of part for these kind of companies?
Yeah, I mean, I think you're absolutely right. Like the notion of like technical defensibility is, going away faster than ever. I do think that taste is such an important component. I find it really interesting that what a lot of, both emerging and established kind of like massive unicorn companies, what they're looking for is not necessarily the best CS students anymore. They're looking for the best thinkers. And what we're seeing a lot is a lot of math majors, philosophy majors, history majors, which historically have like never really been that exciting for startups and kind of, again, fast, innovative companies. But that's what they're looking for, which I think is really interesting. We'll see kind of how that trend continues. But as it pertains to like what I look for, it goes back to really finding the urgency and hair on fire problem, one. Two, I think taste is so important, which is like, how do you prioritize design, user experience? And user experience is kind of an interesting one because it's also like, is it user experience? Is it agentic experience? Like, is it always going to be a user that is actually kind of using your system? Is it ultimately going to be an agent? Like, how do you kind of make yourself so frictionless and beautiful and intuitive for whomever is controlling it? Like that's kind of two. And then the third is going back to the thesis. Another reason why I love like regulated spaces is like, use that as a moat. If you're able to navigate appropriately in regulated spaces, in spaces that have a lot of compliance, a lot of other headwinds, like that intuitively or inherently rather does help provide kind of a defensible moat. So it's a hard answer and it's something we're constantly thinking about. But yeah, above all, like the notion of technical differentiation is it's very different than it was over the last few years. That's for sure.
For sure. Last question, and then we'll do like the quick one minute fire round. Okay, what is in your own like AI stack right now?
So my own internal, I actually kind of alter a lot between a lot of different tools. We have both Claude and Claude Code I've been using for some like internal workflow automation. I am still an avid
Wait, what do you do with Cloud Code? Like, I want to know, like, how do you like in terms of sourcing? Like, do you
yep.
have like a plugin for your LinkedIn, or like is that kind of like I feel it's
Yeah, so what I'm trying to do is basically automate. What I've found is a lot of success in identifying companies through areas like product hunt, identifying companies that are like raising founding engineers, identifying through like product like hacker news on like YC, like some of these like boards. And so what I've been trying to do, they're all different, but at the end of the day, on the top of funnel, what I'm trying to do is automate a lot of kind of these like disparate data sources and distill them down into like a single unified, like clean. All I want right now is a CSV that I can use to like basically then, figure out like who I want to reach out to, like what, but like if I can leverage those tools on the areas where I already see a lot of emerging cool startups before they're like hitting news and as a pre-seed and seed, like I want to be the first guy. I want to be the conversation that I had with Jeeves in February 2020, where it's two guys and an idea on a napkin type of thing. And so if I can sit there, and that's one of the things that I can do with these is like, hey, if I can do a refresh every day of like, hey, the latest on Product Hunt, the latest on Hacker News, like what's flagged, and I can sit there and then see in a structured way, that's a very easy first step. It's like, I don't want to take away my ability to identify what is interesting and what isn't. That is something I'm not comfortable with yet. Like, I don't want to like offload that to AI because it's like, that's my job. That's like what is so valuable and like what I want to be like, that is the secret sauce. So,
yeah.
But like those type of things are the like kind of individual. And I've used like Granola. I've used some like other note takers and like meeting. I honestly, and again, I'm probably one of like 5 VCs that doesn't use one. I don't use anything in meetings anymore because I find that one, I'm not nearly as engaged. I'm not nearly as like I can actually retain more when like I'm the one to like. So I actually completely don't use like any meeting notes or anything like that. They just kind of have the opposite impact for me, and it's so much about winning deals. Is about like getting early conviction, really understanding, asking the right questions, being like fully engaged. And so it almost feels like any tool that sits between me and a founder, I just kind of despise. So yeah, there's a controversial one, but yeah. So I've tried a bunch. I'd say there's not like I use like these 3 things, but I build a lot of custom stuff through both Claude Code and some of the like premium OpenAI subscriptions as well.
What would you say is like one thing that you feel like were like completely different, that you're like how you think about stuff like that's completely different than like at the beginning of venture career?
Oh man. I put way less value on traction in terms of like revenue traction or this or that, because I realized like at the early stage, like
You have zero
it's
traction
so superficial and it doesn't really shed light on like, is this answering the right question or not? I put way more value again on building like relationships, because what I found is that building relationships does allow you to win deals. It does allow you to get your foot in the door. It allows you to get super pro rata. It allows you to like oversubscribe. Like you can do a lot when you can build trust. And I think that's incredibly valuable. And I'd also say it's like, especially with my like operating experience, neither founders nor VCs have a perfect answer for anything. And when a founder asks you as a VC, like, hey, like, what is your opinion on this? It's fine to not know. And it's fine to, kind of talk through and say like, hey, like, we don't know, but like, let's put our best foot forward. And at the flip side, like when I'm asking questions, it's fine if founders don't know things. Like, again, I'm an early stage investor. Like I want you to have a thesis and a point of view. But it's fine if you don't know. So I think that's also something that's different.
For sure. I want to be mindful of the time. Maybe we wrap with a 1 minute fire round. What's your favorite book?
I'm reading Choke Point right now, which is actually very interesting. It's all about kind of like sanctions and like economic warfare, if you will, the history of that type of stuff, which is really great.
Who would you invite to your dinner party?
Mm. This is dumb, but family and friends. I'd rather have it with people I like, love, and can have fun with, as opposed to like, you know, either like celebrities or this or that, or people that I don't know.
Who made the biggest impact in your career?
I interned my sophomore year overseas, and it was great. I was 20 years old. My boss at the time, he left me with something that was very simple and very powerful, which is you'll never get what you don't ask for. He was asking me to come back in the winter for something, but it was very clear and very powerful, and I will never forget that. And I still remember that to this day. It's very true.
Taking note. Although this is like such a simple answer, but like I feel like it is so true. Where can we find you outside of work?
In the winter, skiing. In the summer, golfing.
Wow. You sounds like sometimes Silicon Valley, sometimes not, because like the last answer is totally Silicon Valley. And
Yep.
thank you so much, Andrew, for coming to the show today. It was such a fun chat, and then also like a master class on urban innovation.
Yeah. Thank you, Grace. It was great to reconnect. I look forward to seeing you in real life soon again.
Yes. Okay, let me quickly end stream.